Good morning. Welcome to Admiral Markets, everyone. Thanks for joining us in this live trading room webinar of the 20th of May. We're going to take a look at the charts, as always, and technical analysis, of course, together, and see what kind of setups I'm interested in. And first of all, though, before we do that, we have this PowerPoint, of course, to go through. That's just a quick minute or two where we explain, for instance, this disclaimer that this material is intended and developed for a global audience. Please take into account that the info in this session may not be suitable for everyone. To get the corresponding info and charting conditions and other details, take a look at admiralmarketsglobal.com. Select your country of residence and contact an appropriate entity. Also, of course, trading for exchange and global financial markets is considered very high risk. Trading for exchange is high risk and may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that, and this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with the content stated here, and that the risks involved are yours to take, and you agree with the content and text mentioned in this slide. Good. So thank you for your attention. Got the first sentence mixed up there. Let's see. Otherwise, we have, of course, this checklist and this to-go list when we're looking at the market. This is basically kind of a way to look at the market so that we know that we're not jumping into a trade, that we have done our analysis, and we know that the particular setup has fulfilled what we're looking for. You can use these 5 headlines. Everyone, of course, will use a bit different things within these topics. Obviously, if you're looking to trade with the trend, and you would define a trend and look for a trending situation. Your filters might be different. You might be using a parabolic filter, for instance, and I'm using support and resistance, for instance, etc. Right? Some of them will be the same, some of them will not. Everyone will have their own configuration of these 5 steps, but basically everyone can use these steps. Then, of course, we have the trade management stuff and the execution of that plan. So make sure to take a look at Admiral Markets in social media. And with that said, we always take a look at the calendar quickly to see what's going on. We got GBP, CPI in 1 hour 43, and a lot of pound news, in fact, connected to that. Then we have some dollar news, but nothing really. Most of it is lighter impact except the CPI today. Alrighty, so let's take a look at the charts. Now, to be honest, I've been looking already, of course, earlier today. I usually get up on the earlier side, I would say. And there's nothing, to be point blank, nothing really very, very appealing to me. So that's not so good news, but we can still look at them together, obviously, to see if maybe the environment changes or maybe something that is different and or something changes or something I view differently or you view differently. So we can definitely see and try to spot some of our setups together, right? If you think, first of all, let me start with from the very start of things, let me ask you, do you see something interesting? Do you see a particular pair and time frame that you say, okay, that's something that I would like to trade? Let's take a look at that instead, because I had little inspiration this morning. I didn't see much that I would like to present to you like, okay, this is something that I find interesting. This is something that I'm waiting for. No, to me, everything seemed quite directionless at the moment. Maybe some bigger things could be going on. I mean, it's not something it's not like I have nothing to present to you here, but tradable right here, right now, no. I didn't see it, and I'm curious if you did. If you did, maybe I'll see it from a different perspective. So let me know. If you see something, write down the pair and time frame, and we'll take a look right now. If not, then I'm just going to continue with the $0 4-hour chart here we're looking at. We're using the moving averages. The webinar title today is Trading Confluences on Multiple Time Frames, so we'll be using a lot of time frames logically. And moving averages are good for that confluence. They're actually perfect for the confluence because if you use the same moving averages on all the time frames, then basically they'll be corresponding to each other. The 34 EMA, for instance, on the 1 hour chart, right, is the same, or the 4-hour chart is the same like the 136 on the hourly. So there's a lot of confluence when using moving averages. The euro-dollar, according to my wave analysis this morning, I thought maybe this is looking like an inverse head and shoulders. If you look at the hourly chart here like this, my reasoning was this, that you have this inverse head and shoulders here with the head down below here, right? And let me take off this fib. The head down below, and we have the left and right shoulder here. Now maybe we still need that right shoulder, in fact, because this is maybe a bit early right shoulder compared to the left, time-wise. I mean, this is not matching up. The length of the right shoulder is a lot shorter than the left. So this shoulder would be a lot longer than the left one. So maybe time-wise it doesn't really match. But obviously, if price were to bounce about that area still at around 137, 136.90, I guess we could still have that head and shoulders pattern in play. If we break that 136.80, 90, we could see maybe a bigger fall to the downside. Now just bear with me 1 second as I open my drawing tool. I always forget it. Alrighty. So that's something that pops in my mind. If we break above, obviously what is the neckline? Well, that's this resistance line. If we break above it, then obviously that we will be breaking the neckline. It could be a confirmation of that head and shoulders, and we can see upside. And upside is a potential trade setup that could be interesting. But it doesn't seem likely right here, right now, because price is about 30 pips away from breaking that. So not a tremendous amount of pips, but it's not going to happen within 2 seconds. So we have this neckline, or I should say the head and shoulders line here, basically the shoulders line, in fact, which could still make this a inverted head and shoulders. Let's see. But when we break that support, there is a potential for price actually to continue with this trend down. We didn't break above these resistances. We're still making lower lows and lower highs. So if we break below 136.88, there could be a breakout trade to the downside. So I'm curious how our Camarilla template would be looking like. Let's take a look on the 50-minute chart now together on the $0. What is it saying? It's saying actually the same, isn't it? It's saying L4 short breakout at 136.86. So there is that confluence there for downside below that level. So preferably, maybe this is actually one of the better setups, I guess, as we go along through this together. If price were to fall to this level, preferably make a bit of a bounce, right? And then start falling again, that would be the ideal breakout, because then we have respect for this level and we can enter just below that level and the smaller bottom, right? So once again, a fall and like a respect for the level, bounce, and then the next fall we could have the entry below the L4, below this bottom as well, right here, for a short breakout to the downside. That could be something that's interesting. The target is a bit close. It's only 18 pips. The L5, I wouldn't target the L5 because, well, depending, of course, how tight the stop loss you use or is used. Otherwise, it's a bit tight. Could be used, but I wouldn't want to use too spacious stop loss. Otherwise, the 18 pips is, you know, it doesn't match up to the R2R, which is the reward to risk ratios that most of you probably know what that is. That's the number of pips that you risk compared to the number of pips that you're aiming for in your take profit, or let's say the trading stop that you usually use and have tested historically, and the average what you normally get out of a trail stop. So that's the euro dollar. Let's move over to the pound dollar. Pound USD is not so interesting in my opinion. We can skip it immediately if you like, but if you look at these moving averages, it's all intertwined. You see them? They're all flat. So the hourly is particularly horrible. The 4-hour moving averages here, these two sets are also flat. If we go a bit beyond that, there could be some reason to say, okay, if price were to break above this resistance, for instance, or if it were to break below on the 30-minute chart, maybe this support, for instance, like this, then we could see some up or downside. True, just like the euro dollar, that would be true. But what I don't like about this particular, if the moving averages, particular situation is the moving averages are so flat, if price then tries to escape them, try to move away from them, usually these moving averages will be like some kind of gravity. They will be responding. Price will not be able to pull away successfully in a good number of cases. And usually you'll see price move back towards them. So I'm a bit skeptical about them. If price stays below it for a while, that makes a small pop up, and we see resistance here, then things are different. Then the moving averages are probably already turned a bit to the downside, and things are a bit different. But the initial breakout is something I would be leery of. Let's see. For those that are not aware of this indicator, it's called the Camarilla pivot point indicator. It has pivot points plus Camarilla levels, and you can get them by sending me an email. I'll send it to you. Wait, let me write down my email address. 1 second, folks. Now, I'm using a drawing tool, so that's why I cannot reach the @ sign. That's why I'm writing @ instead of the normal email sign. It's just because I'm using the drawing tool, and it's exactly where that sign is. That's how I activate that drawing tool. So back to the pound dollar here. Yeah, that doesn't seem that interesting to me. I mean, not to say that the breakout couldn't go up, but I'd rather skip it because of that. Euro pound. Well, we can still take a look, by the way, at the Camarilla here too. 1 second. Tight ranges in general. Pretty slow day yesterday. Oh, it was a Monday. If you look at Monday daily candles, you'll see why Monday is a more difficult day to trade. Because usually these days are dojis, or not always, but usually they're a bit smaller. Many of them are dojis. There's just not the same movement. The market is kind of like warming itself up a bit. Picture like a sportsman, and he or she's preparing themselves for a sports match. Normally there you see them like preparing themselves a bit. So the market is kind of the same. It's kind of like flexing its muscles, etc. Kosik, yeah, I sent it to the organizers by accident. Now you should be able to see the email address. I hope. So that's the same with Mondays. Monday yesterday was small, so the levels here are quite tight. Obviously, there could be the breakout to the downside here if we start moving below L4, for instance. Looking at the Camarilla. Odd USD. No problem, Kosi. Very welcome. And that's valid for anyone who wants that Camarilla. Odd USD is breaking through support. So, but the thing is that it already fell quite a distance. Could fall maybe a bit more. Let's take a look if there's still a few pips left to the downside. But it is certainly breaking. It had a bit of a struggle here with getting followed through to the upside. It broke a trend line, as we know, retraced back to the moving averages, broke above them, but this breakthrough didn't really go all too far before we saw a hook back, bounce, a hook back, bounce, but then failure in fact here. Failure in the sense that we didn't continue with the trend. We're not able to break above it again, above the moving averages. We were not able to get followed through, etc. That's what I mean with that. And when we don't get the follow through, we broke through these support levels and we're falling. And we're breaking through this channel. We're trying to break through it. It's a bit on the early side as yet, but we do have 4-hour candles below it. We still have a horizontal level to be aware of. So for the moment, we're getting a breakout out of a channel to the downside with support about 90 at 92, which means still some space. But let's take a look at the intraday trading. If there is some pips to grab, is it worth the risk, etc. Let's take a look at the 15-minute chart here. Well, not from this Camarilla. If anything, we could have a bounce up trade, I would say. Wouldn't it be so? If you compare it to the euro dollar and pound dollar, you recognize one significant difference if you look at this Camarilla. And that's something we already had a hunch when looking at that fall is obviously this has already moved a lot of pips to the downside and has reached the S3 pivot point. S3 is quite an extreme, as we know, regarding the pivot point average. Could it still go a few pips lower? Certainly, it can pass it, but we are getting into an over extreme here, let's say, compared to the pound and euro. Pound and euro are still within the L3 and the H3, right? H3, L3, they're still confined within those levels here. Right, they're still within it. That's of course different when the odd USD is below the L5, so there's a significant difference, relatively. So downside trade, I don't see the potential here. Maybe a counter trend up trade. If price lingers here for a while like this and struggles to continue, and we haven't broken this bottom for 30 minutes, the longer the better. If it hasn't broken for 2 hours, the better. And that could be like a bouncing board for upside. Just witness something like that, for instance. That's something that could be a counter trend idea on this odd USD. We do have a lot of momentum to the downside. That's why I say counter trend. And we broke out of the uptrend channel. Now, why is that 30 minutes to 2 hours important? Because we're still, if you look at all these candles, they're all making, most of them are making lower lows and lower highs. For instance, look at this hourly candle. Look at this hourly chart, sorry. Besides this one here, all these candles are making lower lows and lower highs. All of them. Or at least all of them are making lower highs, exception of this one as well, by the way. All of them are making lower highs, and most are making lower lows with the exception of this one and this one. And this one, that's it. So that is called momentum. That is called momentum. So as soon as you have basically, actually it should be a bit more. If we look at the 50-minute chart here, let's see. We could have two hookbacks sometimes that happens. The first hookback could be on the 50-minute chart. If we don't break this bottom for 5 candles, for instance, you'll see something like this happen. Up. And then we'll see one more hook back on the hourly and up. Why is that? Because basically we're using, if it doesn't break, a bottom doesn't break, a candle low doesn't break within this momentum for 5 candles, 5 to 6 candles, that's used as support most of the time for at least a bigger retracement or reversal. This is very, I would want to stress the importance of this, in my opinion at least, so just that you're aware of that. If you get 5 to 6 candles here, for instance, then you get a bigger hook back on the hourly chart. What does that mean basically? Price makes a retrace, hooks back, and because it takes so much time for the bottom not to break, the market uses this level as support. That's basically what happens. Here too, price makes a downside, but it took a lot of time. This bottom is therefore, this level is a bottom, not any more momentum, and it's used as support. You'll find tons of examples like that. So something like this could happen on the odd USD. Let's see. To the downside, I would not be too much interested at the moment. Kiwi 2, in fact. Kiwi has moving averages flat on the hourly. Doesn't seem too interesting. Kiwi, if you look at the price action here against the dollar, big wick, small inside candle with wick, and we broke below the weekly lows. Kiwi, despite the bullish uptrend, has significant bearish price action at the moment on the weekly chart. It's breaking below a daily support level. And we're getting a breakdown of the Kiwi to the downside. Broke through the support level, for instance. So the target for the moment for the Kiwi downside would be the support level. Also, confluence between the horizontal level and the long-term moving averages on the 4-hour chart. So, for instance, we could take a look at the 4-hour chart, and you can see this downside here on the 4-hour and the hourly. Putting a fib on that downside like this, excuse me, and waiting for a hook back probably would be the best, because here too a hook back would seem likely. Don't forget, the price was stuck in these moving averages for very long, and now it's trying to escape to the downside. So eventually it's going to be a hook back to these moving averages. That would probably be a more interesting short to the downside towards the 85.16 level. I'm not sure what this blue line is. Oh yeah, that was that daily support. So that's something that could be an interesting setup from this fib down to that level. But we need price to retrace first to get there. That could be kind of a swing trade idea. The Aussie USD upside is basically a counter trend, short-term counter trend trade idea setup. The Euro downside is an intraday with the trend setup, and the Kiwi is a with the trend. No, it's more still a reversal swing trade, I would say. So, but one thing I would want to add is that if price does get to these fibs, I want to see proof. I'm not taking it in a pending order, to be honest, because of the moving averages set up here on the hourly. I want to see a wick, a engulfing twin, some reaction of price to that level that it's stopping there, preferably. I don't think I would put a pending order there. Let's see, this is the daily chart. Bearish candles, big bearish day. So a retracement of yesterday's, if we just look at the daily chart, just as is the daily chart, right? Forget everything else for the moment, just for a second. And let's look at the daily pure and simple. What are we seeing? We're seeing basically lower high, lower low, lower low, right? Breakthrough support, bearish candles, retracement, but then again bearish candles, higher highs, higher lows. In that regard, today's initial high, today's, yeah, let's say today's current high will probably not be broken tomorrow if it stays like this, roughly speaking. We'll have to see how today's candle ends, of course, but if it's something bearish like this, an entry indeed around that 86.20, which is a hook back to these support levels, these daily lows. You see all these daily lows here? That could become resistance with a stop loss just above today's current high, something like that, with 85 as a target. Could be an interesting setup, something like that. Good space if that were to happen. Initially, a very, of course, wide R2R setup there. Just looking at the daily chart. That looks interesting to me. And looks worth the risk at the moment. Preferably, it would be nice if today were to break through these moving averages, kind of close below this moving average, this 34 low, close below it, and then retrace tomorrow up to that level and then fall. That would be ideal, I guess, but let's see if the ideal happens. Dollar Swissy. I don't know what to say about the dollar Swissy, except the fact that maybe it's breaking out of this downtrend channel here, or was it the falling wedge? Probably both. This does look like a falling wedge, and we've talked about the falling wedge, I believe, more often. It took some time. Every time we saw this falling wedge, we thought, okay, now it's the time it's going to break. Now it's the time it's going to break. But maybe now it is the time that it's going to break, finally. We do have double bottom here, falling wedge breaking out of it. One thing we have to keep an eye on is still this resistance level. If we break above it, then maybe we have a breakout trade to the upside here above 2.9150. That space between this resistance and this resistance. Right there. Basically. This space. That would be breakout scenario on the dollar Swissy. How to trade it? Lower time frames. Not on the daily chart, personally, because otherwise, where would be the stop loss on the daily chart? It would be all the way here. That wouldn't match up with the R2R, but so for the moment, everything is bullishly aligned on the hourly. So in this case, I would be looking for a break of this 89.60. Otherwise, I am in a waiting mode. Dollar CAD, let's take a look. Dollar CAD. Slowish pair. Always has been. It's back in its slowish mode, in fact, I think. Has daily support, daily resistance pretty close by. Anything between these two levels is really not interesting in my opinion. Anything between these two blue levels is for sure interesting. Will it become interesting if we break above or below it? I'm not all too sure at the moment because it doesn't really have an appealing structure in my opinion. No. Well, if anything, basically it hooked back to the blue intermediate moving average. A break above here would be interesting. If we do break below, then it would be a reversal trade potential back down to the long-term moving average. For the moment, though, not interesting. Dollar yen, not interesting. At the moment, it's just messing about, very choppy. Is there a trade within that choppiness? Well, I'm sure there were trades. I didn't take any of them, though, as far as I remember. And I don't know, to me it seems pretty simple, I guess. If you just look at the sideways move, it doesn't appeal to me. Pound yen. Yeah, the euro yen especially, but also a bit of the pound yen is something worth discussing, I would say. Because we are kind of breaking through. Maybe the pound yen is not that visible. But we are breaking a bit through this support line on the daily chart. Yeah, a bit. But okay, let's see. We've had those breaks before, and those were just retracements still. Like here, for instance, and here, and here, and here, and here, and here, here. Here we did have some bigger retracement. So I think it will depend on the dollar yen. We'll probably have to get some answer on the yen. Otherwise, this could still turn out to be a big choppy zone and remain choppy zone. Also, we still have horizontal levels to be aware of. So maybe the euro yen looked a bit different. Euro yen has this support line that we're breaking through. All of this sideways move has been in 2014. It's funny, 2013 ended with a bang, big upside, and after that it just went flat and sideways. So that's something that I wanted to show you, maybe the break of this daily fractal, the daily trend line, support trend line to the downside. That's something maybe that's interesting out of euro yen. But if I look at the hourly, we can see already kind of like a falling wedge potential slash divergence between these bottoms. And therefore, as I change these colors, and therefore, I'm a bit skeptical at the moment. It's looking good, trending mode on the hourly though, certainly. But it actually looks more like a bouncing spot, more like a retracement slash reversal setup at the moment than downside continuation. For downside continuation, I think we need price to retrace to deeper fibs and deeper moving averages before we can see maybe some follow through. So no, that doesn't seem that grand either. Maybe upside. Let's take a look. Are we counter trend idea? If price maybe lingers here a bit, we can see maybe a bouncing spot. At the moment it's falling, so I would like to see a bounce like this. Alrighty, this is New Zealand yen. New Zealand yen looking definitely different than the dollar yen, for instance. It has been still pushing up in 2014 here, breaking the top, significant difference. Also, we're breaking through these support levels here, through the support fractal, in fact. So in that regard, that is looking a bit more bearish, just like the euro yen. The fact that we broke through these support levels obviously could mean that there's a support resistance potential again, and you see that these are being basically torn apart. So there's space between these moving averages. That's a good sign. Let's see, 15. Yeah, so it's short on this New Zealand yen somewhere at that 87.40 here. Looks like an interesting level. Why is that? Because if you zoom in, you see all of these candles have been retraced except this one and this one here. So if we retrace those, if we trace those levels, those candles, that could be a bouncing spot. Yeah, so let's see. I would still wait for some price action on the 50-minute chart as a confirmation. Let's see, euro odd and pound odd are not so interesting at the moment. I don't know. Pound odd, you can see big retracement down to the medium moving average, bounce up, bounce down, maybe now bounce up again. Doesn't look that appealing on a 4-hour chart in any case. Daily chart, we could still reason for that, in fact. And you can see the potential maybe if price were to break above this top, for instance. That could be a level to be aware of. for upside. It would be kind of breaking this trend line too, like this. There could be some upside potential. Why? Because we have space up to the next resistances. Oh, no. Ah. So let me redo that 1 second. Ah, 1 second, folks. We had this resistance here. Well, it's always good to be aware of, I mean, all these daily fractals doesn't necessarily mean that there'll be styling spots. It depends on what time frames you use. If you use 15, I'll put them all on the chart. And you can see that the biggest space is here and here. That could be interesting. You can see too that this is looking like a hook back in a way, because if you look at the time element, this was a momentum down. This was a momentum up. Why is that? Because we have lower lows and lower lows, lower lows and lower highs, and we have higher highs and higher lows. Here too, this was a momentum down. But it took so long for this to continue that we had more than 5 days. This was like a hook back, looking like a hook back now indeed. So, but the trend line and these resistances would be the confirmation of such. The URI, we actually broke through the bottom, but the same trend line could be true like this. I'm not saying it will be euro upside forever, but at least some upside could be possible up to the next resistances. So that's, I would say, the potential on these two. Before we continue, let's take a look. Richard sent a screenshot. That's great. Let me take a look quickly here with you. Thanks, Richard. It's the audio is the. And Richard has a fib on the entire downside and also on the more recent swing high, swing low. 2 fibs. And there are 2 fibs, 250 fibs, I think. No, there's a 50. And a 38.2. 50 of the smaller one and 38.2 of the bigger one. Plus some old support here, maybe here too, a bit higher. Yep, makes sense. I think that makes sense. I would look, as I said, I would look for some price action confirmation. I think I said it. Or was that the euro odd? Oh, it doesn't matter. But it makes sense indeed. I like the setup. Waiting for some confirmation, though, I think is a good thing because, like for some price action, candlestick pattern, wicks, because otherwise it could still be a false breakout out of the uptrend channel. You see them sometimes. So that's what I would be waiting for. In the meantime, for right this moment, this is a good swing trade, I would say. For people who want to trade right here, right now, I don't think there's a good downside. Let's see what level were those fibs again. But there could be a bounce up to that level that Richard is looking for. The fibs are coming in at 93.20. There's an L3 long at 93.15. So there could be maybe indeed 40 pips to the upside before you hit that resistance. And then there could be maybe downside there. So that's something that definitely could happen. Great job. Let's see. That's something that I'm also keeping an eye on. Kosik is asking, if possible, can we have webinar with AO indicator? Yeah, I agree. Let's take a look at that. Ah, doesn't look like we have one, or maybe it's different. Maybe it's oscillator. No, unfortunately, it doesn't look like we have one coming up. But I'll plan it for next month, okay, or the month after. Actually, it's don't have. Well, I'll try to look at it once with the tomorrow's webinar. Okay, or Wednesdays. We can even look at it now. It's not a problem for me. So how to use it? Well, basically, you can use it as a filter, obviously, so that you look at divergence or convergence to know whether you have something of a mismatch between price making a new extreme and the oscillator failing to make such, or indeed confirming to make an extreme. That's one way. You can use it to count Elliott waves, because the biggest AO reading is the wave 3, and wave 5 should have divergence with wave 3. You can use it to read the swing high, swing low, the oscillator going from crossing the zero line and then recrossing it. That's basically one swing high, swing low. So for instance, here the oscillator crossed the zero line and here did so again. That means that this is one swing high, swing low. This is one swing high, swing low, and this is one swing high, swing low. And you can use those swings to your advantage to also read the Elliott wave analysis, if you like that wave analysis. Price going back to the zero line means that it has done a retracement, especially if it has strong AO reading and price goes back to the zero line. That means that the retracement has been fulfilled on that time frame. Here we have a very strong upside. The price corrects until it hits the zero line. When it hits the zero line, we know that the retracement minimum has been met, and we might continue again with that strong momentum in the same direction of that strong momentum. If it then breaks the next fractal, then that would be the signal of resistance out of the way, and we see continuation. Let's see, the other one was just a classical usage of the fact that, of course, if the bars are green, that we're in an up mode. If the bars are red, we're in a down mode. If the green bars are above the zero line, it's even more confirmed. If the red bars are below the zero line, it's even more confirmed. The stronger the AO reading, the more powerful the momentum is, obviously. What else? There's one more thing I wanted to say. It's very useful for multiple time frame analysis, because if you see, for instance, on the 4-hour chart, oh, this is the 4. Okay. If you see, for instance, a very strong reading to the AO here, like this part, from here to here, for instance, right? And you see a choppy correction following it, and you see the AO go back to the zero line. And if you break the 4-hour fractal, at that point you can then zoom into the hourly chart, right, and look for trades to the upside. You can even take the 4-hour breakout, but you can add to that breakout by looking for potential methods of entering on this chart. for a breakout trade to the upside. You can take the initial breakout, you could take the hook back here, or the break of the hook back, and you can use scaling in. And after that, actually on the hourly chart, it would be only a potential maybe here somewhere, and then that's all the trades, that's all the scale-ins, unless you use a 50-minute chart then again. For instance, 15, if you look at this, it's difficult to add it's difficult to look at it because the Camarilla line's coming in here at random spots, but there could be some potential add-ons if you take some of these pullbacks, maybe, for instance, but it's getting more riskier as you go down a bit. All right, so the AO I think has its best value, I would say, maybe on the 4-hour, just to give the impression of the trend, and then if you see a good momentum, a good place where you can have a with the trend breakout, for instance, or you have divergence and there's a potential for a reversal, you can trade it on the 4-hour and then add some on the hourly at 15. So we can take a look at the 4-hour AOs now together. I'm not sure if I have them written down, to be honest. Maybe somewhere. I'm not sure, because I'm using the AO in one very simple strategy or just as a discretionary part of my trading. The simple strategy is basically looking for the AO to have a very strong reading. There's actually a webinar on that. Let's see the webinar, 1 second. I'll find it for you. Premium webinar, no, it's not that, but it's somewhere in the video archive. I think you've seen it, Richard, but I'm not sure. Oscillator exposed, maybe the 12th of December. Could be it. Otherwise, exposed to the 30th of January. And here I go through the 4-hour trading strategy. It's very simple, in fact, using the 4-hour AO. In this regard, actually, looking at this particular dollar, we have a very strong downside. We're retracing back to the zero line. So in that regard, it would be a potential break below this. I'm not sure about that. I mean, I think that there will be some downside here. As I said, it will be good an intraday trade. Regarding the 4-hour chart, I'm not 100% convinced as yet because the moving averages are all intertwined. That's my own discretionary addition to it. Let's take a look at the pound 4-hour chart. Pretty strong downside too. Bit of a mixture there. Let's see, AUD nothing confirmed as yet. Kiwi neither. You see, all the AOs are actually quite flat, relatively speaking. Dollar Swiss has a pretty good upside. Need to wait for the zero line to get back to the zero line. Dollar CAD. No. Dollar yen, divergence between the bottoms. If anything, it has more downside. Or I should have, if I have anything written down, it's in the PowerPoint. I could send you the PowerPoint, Richard. Just send me an email. I'll try to find that. New Zealand yen, let's see. It's a bit of divergence at the moment. ASEAN, you see, there are not really that many. The Swiss yen maybe here. It's building on something. Needs to go to the zero line though, still, before we see the follow through. Pound yen, pound odd is in that upside as we talked about. The best is to send me an email though, because then I know it's difficult for me to copy that message. Here, I'll put it there. Oh. Doesn't seem to be something that I would say this is extremely nice. Most of these AOs are either building or not having a big momentum. What we want to see is a big momentum and a retrace down to the zero line, and then look for swing trades and continuations. That's one way of doing it. That's my strategy, at least. Let me say it this way. Maybe there are other ways of using it. I'm not saying. You can probably use it at any point in time, but this is the specific setup that I'm looking for. None of them really match that, as far as I can see. But you could probably use it at any point in time. We can see pound odd is building on this upside. So if we look at the 50-minute chart, well, yep, we do see a big momentum up. And if you would have used these moving averages, you see price actually making that hook back. Remember that hook back I talked to you about the Aussie, remember? This is that hook back that I'm talking about, something like that. And you see the bounce right through the moving averages. First you see the price move to the short term, then to the intermediate, the hook back, up to the long term, make consolidation between the moving averages, price then breaks above it, and then starts using the moving averages as an upside. And you can see, look at when price started to make the upside, right? When, after this consolidation, after price was bungling between support and resistance, and the moving averages basically got squeezed, the upside won, price started to pull away the moving averages to the upside, and you can see then started to break out. So it's classical usage of these moving averages. Reversal up to intermediate, up to short term, then up to intermediate, hook back, reversal up to long term, squeeze, then break above for the first breakout in a new direction. Classical in that regard. Price has already moved quite a far away from the moving averages though. So if anything, a retracement back to these moving averages seems more likely. Same like the odd USD, a retracement trade and then some continuation seems the most likely. Here too, we've reached the R3. This is the third 15-minute candle. So a couple of more, maybe half an hour more, and then maybe we'll see some reversal. But don't forget that this has the pound, so that news event is a whole different story again. That's a whole different chapter. That's a whole different ball game. Different structure, different event. Will have its own world, its own influence, its own impact. So I'm just scanning through the charts to see if recap things mentally for myself. and see if there's anything I can emphasize to you that makes sense. The Aussie, basically, we know we're looking at more retracements at the moment, and then maybe continuations, right? The pound is a bit of a mixture. It has a news event as well coming up, so not so interesting. The euro could be at a bouncing spot regarding the head and shoulders or breakout to the upside. Head and shoulders bounce or breakout, or either breakout to the downside. Kiwi, we talked about a potential trade setup at the green line with stop loss at red and target at blue. That's a potential setup, just like the Aussie and euro. What else? Dollar CAD, dollar Swissy, not interesting, especially dollar Swissy unless we break the dollar Swissy. We break this 89.59. What else? New Zealand yen looks bearish if anything else, but it has the yen in it, euro yen too, so I'm still a bit cautious with that. Euro yen could get some retracement first. I'm not a big particular fan of that. Pound odd, euro odd, retracement first maybe before we get to the upside. Let's see. Those are not the most appealing to me. Maybe the odd USD a bit more than the yen, certainly. And the others, the more exotic crosses, are not particularly set up very interesting. No. The New Zealand Swissy was in a strong uptrend, as we can see. Everything is aligned, but now it's making a retracement. CAD yen is totally intertwined. Pound Swiss is the only thing that's maybe trending at the moment. It has everything aligned, green, blue, dark green, everything bullish, good space between it. So let's take a look at the 50-minute chart. Why 50-minute chart? Because basically it has just broken out of resistance. It is a strong uptrend. So I wouldn't want to take a swing trade here, even intraday to reach the R2 and H5. But maybe if it hooks back maybe for instance to the pivot or to the H3, it could be a bouncing spot for upside. But we have to wait for the news event. So Pound Swiss, it could be also interesting. But waiting for the news event. That's about it. Do you have any questions maybe for me? Anything you would like to ask? Anything you want to share maybe regarding a setup, trade management? Ask me if what I would do in a certain situation. So still found actually some stuff to look at, like this Pound Swissy, like this Kiwi dollar, like the odd USD, pound odd, euro dollar. Those are the main ones, I guess. Keeping a small eye on the euro yen and Swiss yen, for instance, and New Zealand yen maybe, but not particular big fan of the yens, nor the CADs at the moment, nor very much the Swiss franc, except maybe the pound Swiss, nor the pound element, pound pairs because of the news. I guess that would be the summary of today. In general, though, market quite slow in my opinion. I mean, the last 2 weeks, I don't see particular things that are very interesting to me after I've come back. Even before I left, the market seemed a bit choppy to me with a lot of retracements, but so if there are no questions, I don't see any at the moment, then I don't want to hold you up anymore. Time is valuable for everyone here, so I've shared everything that I can see at the moment, and in that regard, it even lasted longer than I expected because, as I said from the very start, it doesn't really look like a very interesting setup structure of the market today. But we could see maybe some potential setups on the odd, as I said, today and tomorrow. So it's something we can still keep an eye on. Monday is always a slow day, and I think the market slowly but surely could be warming up a bit more today. So, and tomorrow we could maybe see some more interesting setups throughout today and tomorrow as the week usually progresses. So thank you so much for joining today. We'll be back tomorrow with usual webinars of Tarantula and myself at the same time, same place. We'll be looking at intraday and intra-week trading myself, and then range bars from Nenet in the evening. So thanks for joining. Thanks for spending your time with me here, and see you soon. Cheers.